focus on the issue of cryptocurrency. In what comes as a setback for crypto investors, the centre has clarified on two key issues. First, losses in one crypto asset cannot be set off against gains in another crypto asset. And the second clarification is that crypto mining costs can't be deducted from overall gains as cost of acquisition. Centre also said that government will come out with a definition of virtual digital assets. Let me go across to Avni Raja, our colleague joining us from Mumbai newsroom with more details on this. So Avni, even though this entire issue is a bit complex to understand, it is very, very important for the crypto investors to know about it. So please explain to our viewers what exactly has the government said when it comes to clarifying over these two key issues.
Well, that's right. Let me break it down as to what these clarifications have been. In fact, this is something that the industry was waiting for word on this clarification. So the first point of clarification is that loss in one crypto asset cannot be set off against gains in another crypto asset. So what does that really mean? Now, there is a 30% tax that is payable on all gains. This was also announced back in the budget as well sometime back. Any losses are deductible. In fact, are not deductible is what this clarification says. So essentially, just to give you an example, if you earn a profit of 100 rupees on one crypto and a loss of 100 rupees on another crypto, both of them cannot be set off against each other. It means you will still have to pay the 30% tax on the 100 rupees profit that you have earned. Now, essentially, this means that each crypto will have to be treated separately for taxation purposes. This is the first big clarification. The second clarification is that infra costs incurred in mining of cryptos, that will be treated as a capital expenditure. Now, before I explain what that means, just a quick word on what exactly is crypto mining. It is essentially the process of generating new coins, the process by which new coins are entered into circulation, verifying new transactions on the blockchain, and it involves a lot of processing power. So miners are the one who essentially secure and maintain the blockchain. So this particular clarification means that crypto mining costs cannot be treated as acquisition cost. Remember, cost of acquisition is deductible from the overall gains, but mining infrastructure is not part of that acquisition cost. So there is no deduction that will be allowed in any expenditure except acquisition costs. This is the other big clarification. This is the two big clarifications that have come in at this point in time from the centre. But let's understand what this really means now as far as the entire industry itself is concerned. Vikram Subburaj, CEO Goitus Crypto Exchange, is joining us on the broadcast, and Kashif Raza, founder of Bitinning as well, is with us. Thank you both of you for joining in. Vikram, let me start with you first. Your reaction here, because this has caused quite a bit of uproar in how stringent these clarifications are.
Yeah, I mean, see, first we are trying to understand the reasoning behind doing this. Losses in one crypto asset cannot be offset against other. And we are still yet to identify or understand, what is the good thing this is going to do to the consumer, right? As a matter of fact, for investor perspective, this will actually ruin their portfolio management. Investors will start going towards maintaining a portfolio with very few assets, which is not good. So better the diversification, better the portfolio is, right? Be it any asset it is. But such a law, right, where you're not encouraged to take risks here, right, will only be counterproductive in the portfolio that they're going to manage, where the portfolio is going to have very few assets. And if those assets are not going to perform, there is no way of offsetting it against anything else. So it is a bit counterintuitive, and we're unable to understand the exact reason with which the government wants to do this here.
Absolutely. Kashif Raza, your thoughts on this, on both the fronts, they seem to be quite stringent clarifications that have come out, and it is going to it has in fact caused this kind of an outrage right now.
So yeah, there is no doubt about the fact that the taxation laws are quite stringent. So this is going to have a deep impact on the industry as such. The industry is going to die slowly. Why? Because the major impact will happen on, if you try to understand it from an investor perspective. Investor will not have an option of diversifying their portfolio, as he's absolutely right once he said that. And investors will be a little they will be a little apprehensive to trade. And what does that mean? Because if trading won't happen. The trading volume will go down. The exchanges today, they have their cost to run an exchange. And what will happen when the trading will go down? There won't be any earning for the exchanges. And once the exchanges won't earn, the exchanges are supposed to shut down their shops, or probably you'll see that a lot of consolidation will happen in this area, where a heavily funded exchange will buy a more vulnerable exchange. So you'll see a lot of consolidation. You'll see industry will go down, and probably for new investor also. Once a new investor will see that in this industry, once you have a 30%, the flat 30% tax, and only on profit, and you cannot set off your losses. So what will happen that the people will move from crypto to stock market, and slowly and steadily you'll see that there will be a very less interest in this space now.
Vikram, the other aspect about mining costs, not being deductible, this, of course, as far as India is concerned, it's still a very nascent stage in terms of crypto mining itself. But this move seems aimed at trying to nip that whole, aspect in the bud in the beginning itself.
Yeah, see, now, when it comes to mining, right, there should be a clear thought-out process of, are we going to encourage this industry in India, right? See, for example, when all the miners moved out of China, there are a lot of European nations, even US, they absorbed these miners, right? Now, does India have a strategy here? Are we going to encourage miners here? That is a larger question the government has to answer here. Currently, you're right, there are not much miners here in India. But there are few miners here in India who will definitely be discouraged by such a move, right? For innovation, for a new industry to come here in India, right? There should be some laws which should help or safeguard these new industries that come into being. This proposal for going very stringent on mining, it is going to be more counterproductive for more mining or anything to happen here in India.
Right. Kashif, do you believe that, we could still see some sort of changes as far as this entire process? Of course, the entire space has to still be regulated. But going forward, is there any indication that we might see even these rules so far that have been put into place overhauled as we go along?
No, so first of all, we need to understand that, right now the clear bill is not there. So right now we do not have a proper crypto bill as of now. What government is trying to do is that till the time the bill gets presented in the Lok Sabha, in the parliament, what they are doing, that if there are people, if they are making money in crypto, if there is any income that is being generated in the sector, the government is trying to tax it. But the problem is that the way they are treating this industry right now, they are treating is as good as a gambling or a lottery or an income from a horse racing kind of this thing. Whereas it is not equivalent to gambling, it is not equivalent to horse racing, because this is right now what we are talking about is technology. And this industry overall globally, if you see the size of this industry is quite big. We have seen that the industry went till $3 trillion in terms of market cap, and mining is a very important and integral part of this industry, because this 3 trillion is actually secured by miners only. So mining in itself is a $1 billion industry. And what is happening today, if we are not encouraging these industries, so ultimately these industries will shift to other places where they'll find it favorable, like Kazakhstan, US, and many other nations are like inviting miners to their base locations, because they understand that mining in itself has a huge potential to add to the economy. Right now, the only request I will make to the government on behalf of the community, that a dialogue need to happen. And taxation, people are not apprehensive to pay tax. They are willing to pay taxes. Just that the taxes should be as good as, it should be equivalent. The industry should be treated as a normal asset class, the way we handle, stock markets or commodities. A similar kind of a structure should be built around crypto as well.
Vikram, do you believe, especially on the first, clarification with regard to the taxation and the offsetting part, that it is extremely draconian? Do you think we could see that somehow, evolving over a period of time, or is that simply right now a clear message that this is our stand by the government, that this is our stand on crypto, and this is the way it is going to progress, even when it comes to, the actual bill and the regulations that will come out?
See, I strongly believe that definitely there's going to be a discussion on this. As an industry, we'll definitely be representing with the regulators on this particular point at least, right? Because we are yet to identify a clear logical reason behind why it should be treated like that. If there is one asset class, let the whole asset class be treated in a single format rather than each and every asset in it being treated separately, right? So we don't understand the logic, we don't understand the reasoning why this has come up. So definitely we'll be representing it, definitely we'll be trying to understand why such a move, right? I strongly believe this particular point, at least there could be a rethought, or there could definitely work out something which could be reasonable, right? We don't want regulations or laws which are so unreasonable that could kill the industry from the ecosystem, right? Any law or regulation that is positive, that could help the technology to grow in the country, we'll be happy to take it. Anything else, we'll definitely be trying to represent to the government. And see, in the past few months, if you notice, the government has also been open hearing the views of the industry body, which is very positive, right? So we'll try to represent with the government, try to show how the industry works, try to see how this is actually going to negatively affect the customers. Rather than helping the customers, safeguarding the customers, this will greatly affect their portfolio and put them in much more higher risk. Maybe we'll try to represent in that format and see to it that this changes quickly.
Right. Kashif, the other question I had is with respect to all of these kind of draconian rules that are being perceived as extremely draconian right now, coming into play with respect to virtual digital assets, somewhere the lines between blockchain technology, which a lot of experts have said is extremely strong and should sort of be encouraged to be used in various ways, that is getting blurred with crypto assets?
Yeah, so nations around the world are of an opinion that blockchain technology is good and crypto is bad. So I think if you really want to harness the true potential of the blockchain, if you really want to harness the true potential of the blockchain, crypto is essential part of it, right? Without crypto, this distributed ledger technology cannot grow to scale. So the government, when they say that distributed ledger technology doesn't need crypto, so they're just talking about that, to implement blockchain as a database, right? As a database that can be governed, that can be the rules of that blockchain can be governed, centrally. The blockchain that we are talking here, the Ethereums and Solanas and the open blockchain that we are talking right now, for that, to maintain that network, you need crypto, you need a reward system. That's the reason those open blockchains, they become decentralized. Crypto is the essence of those open blockchain. So this technology, crypto, is essential and integral part of open blockchain. The government, what they are talking right now is about the private blockchains. That is a possibility, but they do not have the potential to scale to a global level. That the kind of growth that we are seeing in the open blockchain vis-a-vis the private blockchains is going to be very different, and it is going to be different scale altogether.
All right, we'll leave it there. Kashif, Vikram, thank you so much for joining us with your perspective. So Gauri, there you have it. Clearly, there is still a lot of clarity that the industry wants on the clarifications, ironically, that the government has put forth at this point in time. Remember, the entire space is still unregulated. We will have to see how this plays out. Back to you.
Absolutely. Avni, thank you so much for that conversation.